Hello and welcome to Mint 5 in 5. I am Nasrin Sultana and today we are discussing Reliance Industries March quarter result. And to take us through all the numbers, I am joined by Mr. Prayesh Jain, who is the EVP Research at Securities. So Mr. Jain, what's a reading of the March quarter numbers?
The results were broadly in line with expectations on most parameters. There was a slight beat on petrochemicals, but that was offset by a slight disappointment on the refining side, and both the other two segments, the retail and the telecom, were very much in line with expectations. But I would say it's a healthy set of numbers, which indicates a good trend going ahead as well.
Right. So GRMs, which is the gross refining margin, which is very important for a company like Reliance Industry, that has fallen in this quarter to $8.2 per barrel. So what is your take on that?
See, the GRMs globally have been on a downtrend, and that's mainly because the spreads on gasoline and gas oil have been weak. Naphtha cracks have fallen significantly. That is because of the kind of ethane capacities that are coming up in US. So all those are putting pressure on the product spreads, and so Reliance obviously will also bear the brunt of it. But however, if you look at the outperformance of Reliance over the Singapore benchmark, that has been widening. So that clearly indicates that Reliance, owing to its product placement strategy as well as the crude intake strategy, they have been able to outperform the Singapore benchmarks. Plus, I think going ahead, they would have the benefits of the petcoke gasifiers coming in from next year onwards, in fact from FY20 onwards. So that would add to the GRMs. So overall, my expectations for GRMs is that they should move up for Reliance from here on. This would possibly the lowest level they would have seen in some time for now.
Okay. So what about the Reliance Jio's ARPU number? ARPU is average revenue per user, which came little lower than the street estimate. Does it concern you?
See, one of the facts is that during this quarter, the number of days itself were lower. So that was a clear expectation that that would impact the ARPU. For Reliance Jio, the ARPU cannot fall further. The fact is that all their products are on fixed pricing. They don't have per minute billing or per SMS billing, that kind of a system. So it's a fixed pricing. The mix has been slightly in favor of the Jio phone users, which are at the 99 monsoon offer, but even those are upgrading to the higher offers. So I think the ARPUs don't concern us. I think they should at best be at current levels. At worst be at current levels.
All right. Next question would be on the Reliance Retail, which has done a very good revenue this quarter. You think they will be able to sustain this kind of revenue growth?
Yeah, definitely. And the kind of expansion they are doing, plus the kind of product strategies they have in terms of tying up with the global brands, plus their own brands are being quite well accepted in the markets. So I think that trajectory in terms of growth is very much there and would sustain. In fact, their same sales store growth across product categories have been upwards of 25%. So it's not just the addition of stores that is bringing the revenue. The acceptability of Reliance as a better organized retail player is there in the market, and that's clearly evident from the same store sales growth numbers. I think that kind of trajectory should sustain over the medium term.
Right. So my last question would be, which everybody wants to know, is how to play the stock now.
See, we have been bullish on Reliance Industries for quite some time, and in fact in our Q3 update we had a target price of 1550, but we would be raising the target further now, and we are absolutely positive on all the businesses. The refining business, as I mentioned, is set for a GRM improvement. Petchem might see a muted trend over the next couple of years because of the kind of pressure we are seeing on the spreads. So that could see a muted trend. But Reliance Retail, for that matter, or Reliance Jio, I think there's a sustained improvement that would see in terms of earnings growth. Even the worst segment that we never speak about for Reliance now is the E&P segment. By FY21, you would see new gas production coming in. So even that would see a meaningful contribution. So overall, we would see a very strong earnings growth, and the kind of re-rating we've seen for Reliance stock, that should sustain. So I think it's a great stock to buy even at current levels.
Thanks, Mr. Jain. That was insightful. So next week, we have big companies like Maruti Suzuki, Hero MotoCorp, ICICI Bank. So for more analysis, stay tuned.